Good afternoon, everybody. This is Enrique Rodriguez, Absolute Mortgage. I'm going to be coming to you today doing this in English. For those of you who were not in on my Spanish class, I did spend some time going over a lot of what's going on in the state of mortgages and rates in 2022. I'm also going to be covering non-QM products quite a bit. So let's kick right into it, just so you guys know, if you guys don't know me, okay? Obviously, everybody knows me as El Patron. Been doing loans since 2002. Obviously, my contact details are there, my cell phone, my URL, in addition to that, my email, in case you need to get a hold of me. Moving right along, rates in 2022 and the outlook for the housing market. So currently right now, the question is, what determines mortgage rates? Because obviously, as you know, rates have been going up steadily and quite a bit this year. So as you look at the charts here, right, as you look here, my little pointer, I'm showing the beginning of this year, this 10-year Treasury bond was trading at 1.41, right around here. A Fannie Mae, Freddie, FHA conventional loan you could get at like 2.875 to maybe a high of 3.25. Just in the last 2 months, this bond has gone up over 2.05. The chart there shows, this was 3 days ago, when the invasion, obviously, from Russia into Ukraine was happening. The Dow was down 600 points, the NASDAQ was down 200, and the yield was down from 2%. So obviously, you know, close to 9% it was down for that day. If you look at it today, obviously, it's well back over 1.96. So it's continuing to trend higher. So obviously, let's take some time to talk about what determines mortgage rates, right? So mortgage rates there's several factors, but three big ones. One, inflation, which currently stands today at 7.5%. The price of the U.S. Treasury, the 10-year, which currently stands at 1.96 today, okay? And keep in mind that with that being said, you also have the Federal Reserve that controls the printing of money, controls what the overnight borrowing rate is to banks and other financial institutions. If you don't already know, back on this chart here, August, sometime in 2021, rates you could have gotten as low, a 30-year fix, 1.75. That's right, guys, 1.75. And of course, with that, with low interest rates, low inflation at the time, money being easy to borrow, you created this major boom that took place. So I'm going to go in a little bit further into what we call that major boom. So currently right now, you have what's called the perfect storm. The best way to describe the red-hot housing market we've seen from coast to coast during the pandemic, it was spurred by a combination of recession-induced low mortgage rates, remote working allowing borrowers to sprawl further away from their workplace, and a demographic wave of first-time millennial homeowners centering and entering into the market. Of course, years of underbuilding means there simply aren't enough homes available to meet this demand. Cue record price growth. But how much longer will this run last? Is so the question. After all, home prices appreciated over 19.9%. That's a 12-month record, guys, set between August of 2020 through August of 2021. can this be sustained forever? Obviously, there are several forecasts out there, several key influencers, individuals that follow the market and basically are supposed to be experts that have their own opinion. Already there are signs that the housing boom is losing some steam, as they would say. We're seeing since a seasonality, as they would call, a cooling period that happens like clockwork most years, returning to the market after what was absent during the holiday and vacation stretch last year. That's not all. More home buyers are finally beginning to push back against surging prices. Indeed, October 60.30 of sales involved a bidding war. You have what's called the seller's market, which is down from the all-time high in April, 74.5. There's also the increased likelihood the Federal Reserve will raise rates to tamper down inflation. Rising mortgage rates will price out some buyers altogether. So, let's talk about the market that we're in, Florida, the place where everybody wants to vacation. The place where you have no property tax, you have no state taxes, and in addition to that, you have warm weather, booming employment, tons of new business flying in, coming in, and creating more jobs. I'm under the opinion that Florida is going to become the next California or the next New York. So if you're not buying now, you're going to get priced out. So, what does it mean for home price growth in 2022? Now remember, we talked about what some economists and some experts are saying what's going to take place. So you have one economics, this is from Zillow, that says we're going to expect a 13.6% increase this year. Then you have those from CoreLogic and the Mortgage Bankers Association that forecast a loss of 2.5%. And I have several other charts that I could go through. The bottom line is over the next 2 to 3 years, they're seeing a small possible stagnation this year, but over the next 3 years, you're going to see an increase of over 21%. So you're still going to see amazing growth. Now, I venture to say if we look at Florida, with everything going on, with massive people moving here daily, over 1,000 a day, that's not going to happen. So, most people talk about, well, the retail sector, and inventory's low, and there's not enough houses on the market, and it's starting to top out now. So we got to look at what's out there, right? You got to look at all the factors that are involved. You got COVID starting to, simmer away. Less people are moving with the, oh gosh, our state is shut down, so we got to go to another state that isn't. So that's starting to kind of shift away. So you're seeing a little bit less from the Northeast starting to come here and from other places because of that. So that's obviously going to help with inventory. Secondly, you have those who believe the market's topped out, including some institutional investors like Blackstone. Blackstone happens to own $448 billion in real estate, primarily the single family and retail housing market. Okay, so obviously, like most intelligent and sophisticated investors, they have billions and billions of dollars under management, and they need to show record profits, and they have been every quarter that you can see. If you go to their website, they've just been making profit over profit over profit year after year, quarter after quarter. How do you do that? You buy low and you sell high. So they were buying in the lowest levels, and now at the top, they can't flood the market, but they're going to slowly start to taper off, and that's going to create some additional liquidity and some additional inventory that's going to hit this market. In addition, you have your real estate investment trust, you have your insurance companies, MetLife, State Farm, Allstate. All these guys are buying, okay? And this is just some statistics here. They were up 36%, REITs, in 2021, compared with 26% for the Standard & Poor's 500 index as of December 23rd, according to real estate analysts from Green Street. If that trend continues the remainder of the year, 2000 will be the REITs index best year since 1967 in terms of absolute performance. So guys, listen, there's 3 things that are guaranteed in life: death, taxes, and you gotta live somewhere. So you're either an owner or you're a renter. So obviously, with everything taking place, these institutional investors control the market. They know that there's going to be a little bit of a topping off. I don't believe much of it's going to happen in Florida, but in several parts of the other country, absolutely. So that's my take on it, moving right along. So that's what I think overall, the inside of the market, what's happening with interest rates. Interest rates obviously are ticking up. Currently, right now, a 30-year mortgage in the beginning of the year, we were as low as 3.0, even 2.875. We're now looking at 4.25. So they have trended up. The 10-year bond has gone up over 30%, just about, or between 25 and 30%, just in the last 2 months. So there's a reason for that. Inflation, you got to cool down the economy somehow, and the Fed is possibly going to increase rates 3 times this year. 3 times. So, as I was saying, I was going to spin into a little bit about rates. I was going to go into what I thought about the housing market, and I've covered those 2 things right now. Obviously, if you have any additional questions for me, you could reach me 561-723-7971. In the meantime, let me go into the first-time homebuyer programs. You have still lower down payments than traditional mortgage. Anyone who has not owned a primary residence or second home for the past 3 years can be considered a first-time homebuyer. You got more flexible credit guidelines. You even have programs that give you 100% financing may be available. Let's talk about the first one, FHA. Obviously, everybody knows the program, 3.5% down, 3.5% closing costs. Obviously, in total, 7%. So, quick analogy, 100,000, you need 7,000, 200,000, 14,000, 300,000, 21,000, 400,000, 28,000 in order to make a deal happen, okay? FHA, here's some of the highlights. So single-family residence, 2 to 4 unit properties, 30, 20, and 15-year fixed, owner-occupied only for FHA. FHA borrower credit profiles, minimum credit scores of 620 and as low as 580 with DU approval. Debt-to-income ratios are as high as 56.99, as low as 3.5% down payment, and you can get up to 6% seller concession. Newsflash, ding, 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 ding. With Absolute Home Mortgage, we will help your client with up to 2% of their closing costs. So instead of having to come up with 7%, you come up with 5% with us. At Absolute Mortgage, reach out to me. I'll let you know how we can make it happen. VA. So we want to honor our active military. We want to tell you thank you for all the work that you're doing for us now and what you've done in the past as a veteran. With the VA, you have 0 down payment with your certificate of eligibility. You have 30 years and 15-year fixed, owner occupied only. So no second homes, no investment properties. VA borrower credit profile, minimum credit of 620. I've seen some as low as 580s. It all depends on, how Fannie and Freddie are feeling that day, I should say. I'm kidding. It's not how they're feeling. It's just a system. It's an algorithm. It all depends. Debt to income can be unlimited with compensating factors, as low as 0% down payment. Ding, 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 ding. News flash again. Only with absolute mortgage. We will give you the 3% that's needed for closing costs. We'll give you up to 1% to help with your closing costs. Conventional, 3% down, 3.5% closing costs. Owner occupied, obviously 3% down. Second home, you could do conventional, 10% down. And investment properties, 20% down. Loan limits and LTV, obviously you see per county, there are loan limits. They have changed in 2022, and we'll be covering those. Single family and second 2-unit properties, you got 30 and 15-year fixed mortgages. You can do purchases and refis as low as 3% down on single family owner occupied and 3% seller concession. Typo on the slide, up to 1% help from absolute for closing costs. Okay? Up to 1%. Here, just some of the changes that took place here in the state, in the county of Palm Beach. These were 2021 county loan limits. So as you can see, FHA 402,500, conventional 548,250, VA 548,250 has now changed to 420, 680 FHA, 647,200 conventional, 647,200 VA. So they have gone up. Every single county in the country has gone up. So with the economy continuing to grow, with property values continuing to rise, they are continuing to, the government, the Fed, they're doing everything in their power to continue to help to with the growth that we're seeing, so as not to stagnate or stifle the economy and its growth. Okay? Minimum credit scores and max debt to income ratios. So for FHA, 620 FICO, as low as 580 with DU. Max front end is 46.99. Back end is 56.99. With DU, you get what's called an approved eligible. With LP, you get eligible accept. Conventional, 640. They do like to see as high as 680. 50-50 back end. Sometimes it could be 45 front end. It just all depends. Again, DU approved eligible, LP eligible accept. And with VA, 620 minimum FICO, unlimited with max debt to income with compensating factors, approved eligible DU, and eligible accept with LP. Moving right along. You also have, this is what you're going to get when you get an approval from us, okay? You're going to get what's called the DU underwriting findings. What we want to see is in yellow, approved eligible. In addition, for LP, we want to see eligible accept. Yellow and green, that's the thing we want to look for. This is basically a commitment from our government, from Fannie and Freddie, telling us that this individual is approved, and as long as we go ahead and follow the conditions and can clear those conditions, you're going to get an approval. And you're going to be able to qualify for the home of your dreams. So, seller concessions and gifts. So, great way to assist first-time home buyers with concessions. FHA and VA, you can get up to 6% seller concession. In addition to that, conventional, you can get up to 3%. Gifts from family members are allowed on all VA loans to cover the minimum 3.5%. Gifts from family members, those numbers, again, the seller concessions are the minimum, but gifts towards down payment and closing costs up to 100%. Okay? Moving right along. So obviously, guys, as you know, you have your conventional government programs, which are FHA and conventional. And then you have what's called stated income, 20% down, liar, liar loans, okay? So obviously, these rates all are subject to change. Actually, there's one up there that I'm going to take off that shouldn't be up there, but you have what's called stated income. That means they don't verify employment, you don't put down income, there's nothing, no bank statements, no tax returns, no nothing. You put down 20%, you have a minimum of 680 credit score, self-employed with a CPA letter. From 680, you're going to need a minimum of 12 months reserves. If you have over 720, you're going to have 3 months reserves, and over 740, you have no reserves required. You can get up to 6% seller concession gifts, and the debt to income is 50-50, okay? We have to obviously have at least 30 days, the assets sitting there, not 60, 30. We do have fixed rates for 30 and 40-year mortgages. That's correct, guys. This is called non-QM. No reason why you can't be able to get someone else a loan that they need that can't qualify through Fannie and Freddie. Bank statement program. So this is infamous, and then let me touch bases here on just some statistics, okay? 9.4 million self-employed working, currently the highest since 2008, okay? In addition to that, 4.5 new businesses started from January through October of 2021 in the state of Florida, okay? Very, very interesting statistics showing a lot of growth, showing a lot of individuals needing these type of programs to get qualified. So you have what's called a 12 months personal bank statement program, where we will accept 100% of the deposits. What do I mean are deposits? So cash, check, any form of an electronic payment like Zelle, Venmo, Square, Cash App, all considered deposits. What isn't a deposit is you have a savings account and you transfer money from the savings to the checking. That's not considered a deposit. What would be considered a deposit is a business account putting money into the personal, then that would be considered a deposit. Minimum 660 credit scores up to 90% LTV, 40 years and 30-year fixed mortgage. Same scenario, self-employed, CPA letter, and new this year, 2020, you can now use multiple bank statements and a minimum of 6 months. Now, if you use 6 months of bank statements, we are unfortunately capped to 80% LTV. But if you use the 12, we can still go to 90. But you can use multiple bank statements. What do I mean by that? Husband and wife, they have one joint account where they both deposit money in, and then they each have their own personal accounts. We take all three accounts, put all the deposits together, and that's going to be used to come up with what's called their monthly income that we'll use for debt to income purposes. Another thing, debt to income, 55% debt to income in this program. Again, 720 plus credit score, you only need 3 months of reserves, period. 12 months business bank statements, you're going to need, you can only use 50% of the deposits, okay? Keep in mind, great program for individuals that are self-employed, unfortunately don't show a lot of returns on their taxes. This is a great program to help them qualify. Minimum 10% down, bank statement program, non-QM, no PMI, no mortgage insurance. So I'm qualifying a lot of individuals because of this program. Foreign nationals Who doesn't want to come to the USA? Everybody wants to be here, especially in Florida. In addition to that, you have your Canadians, you have your Europeans, you have, all over, North America, South America, they all come here, okay? This type of program is very, very simple. There's really three real criteria that they're looking for. One, they need a valid passport they like to see a visa, tourist visa if possible. It's not required, but if you have it, all the better. In addition to that, the 20% down that's a minimum plus 5.5% closing costs needs to be in the bank account for 60 days in your country of origin. So if you live in Colombia, you have to have the bank account in Colombia with 60 days of those funds being there seasoned, okay? In addition, you'll need up to 3 months reserves. That's the second. And the third and final condition and requirement that's needed is once you find a property, you enter into a purchase contract, you have to have a checking account in the United States. That checking account can be opened pretty simply with a passport, and the closing costs plus the 20% down, okay, is going to come out of that checking account. So moving forward, you could take the money that's in Colombia in this scenario, wire it the same day, and all additional payments come out of there. So all monthly payments, the money for the down payment, and the closing costs. So it's as simple as 1, 2, 3. Valid passport, 60 days, money sitting in your country, and having a account here in the United States where everything else comes out of moving forward. You could either open it in your personal name or you can open it up in an LLC. Great product. For those realtors that are out there looking to obtain new business, the foreign national market is huge. Plenty of money pouring into the United States. Keep in mind, guys, we are a country of stability. We are the world leaders. Our currency, the US dollar, backs everything. So everyone looks to us as a very stable, solid country to, put their investments in, to put their dollars in. So a lot of other countries, are having political issues. They don't know what's going on, and they're pulling their money out. They'd rather put it somewhere else where they know it's going to be accessible to them, and they don't have to worry that the government's going to take 50% of their assets. Or in some cases, all of it. Depends on where you're coming from. So, not to mention that, you also, with all the, with the returns that we've been seeing, it's a great way to invest money and get some nice returns as well, so it's a nice investment vehicle as well to create passive income for yourself. The interest only 40 years, 95% LTV, 5% down. So this program's great. So you can qualify one of several ways. First way is 1099s only, W-2 only, 12 months of business bank statements, and obviously also taxes. So, you have 4 ways that you can qualify your income. 5% down, no MI, okay? And 40 years, interest only, if you choose, or 40 years, principal and interest. 5% down, guys. 4 ways you can qualify. I don't want to hear that you can't qualify a person to buy a home, because all the programs that you need, we have available for you, okay? Here at Absolute Mortgage, obviously I'm known as the Patron. Welcome to give me a call anytime. I'm obviously available. I appreciate you guys reaching out to me. And I believe this is my last, okay. The last one here is my I-10, okay? Work permit, okay? Green card, visa, okay? So this very similar to the program we talked prior in the slide. You have several options. You can go 1099 only, W-2s only, 12 months of business bank statements or personal bank statements, or taxes, okay? Obviously, rates, I'm going to scratch off. I can't tell you rates. You come to me, and I'll let you know based off the guidelines per every scenario. But keep in mind, you could get 100% of gift funds. You can get gift of equity. You can do non-warrantable condos. So you're worried you need 20% down, budget, they have to have 10% reserves. Not with this program. You can get up to 90% LTV, 10% down. Debt to income ratio is as high as 55%. I have 30-year fixed, 40-year fixed programs. Minimum investment is $100,000 is the loan. Appraised value is okay. Rural property is okay. Green card holders okay. And the infamous I-10. You can go as little as 10% down, okay, with tax returns, okay? Now, 15% down I could do with profit and loss and 5.5% closing costs. In addition to that, obviously, for getting better rates, the more you put down, so 20%, 30% down, rates get a lot more aggressive. Obviously, you could reach out to me. I'll be able to tell you based on our guidelines and rate sheets for that day where obviously the credit is and where the rates are. In addition to this is a great program for those who just don't believe that they can ever qualify for a mortgage. You got it here, okay? This is the opportunity to get them into something they didn't believe they could do, okay? And then finally here is a quick closing to, the overall presentation. Keep in mind, some of these are statistics that are proven. Some of them are just based off of my belief, my analysis, and my years of experience. Do not take this as a crystal ball, deciding to do everything you want based off of this particular, slideshow that I did. But do keep in mind whether you are an individual that could qualify with personal tax returns, or you're an individual that's self-employed, or you're an individual that's, that's a foreign national, or you're an individual that, just can't provide income or can't show anything. The bottom line is there is a loan for you. There's no reason for you to continue to pay rent and not be a homeowner yourself. For those of you who would like to reach out to me, I'm here at Partnership Realty on Tuesdays and Thursdays from 11 a.m. to 7:30. My number there is 561-723-7971. You also have my email. You can reach me via WhatsApp that way. I'm also, all over Instagram, Facebook. I'm very easily, available to get a hold of. With that being said, keep in mind, guys, this market is only what you make it. Those who are out there, there's always going to be a buyer, whether you have rates at 3% or rates at 9%, or whether the market is up or the market is down. You're always going to have somebody that's looking to buy. So it's up to you guys to get out there, hit the pavement, make it a tremendous year, and let me, El Patron, help you with all of your mortgage needs. Thank you. Signing off. So I don't know if there's any